is that we also offer our services to other campgrounds as a management service, right? So we of course manage our own, but we do now also manage other third-party campgrounds. So those owners that are out there that still love what they do, love their property, don't want to sell it, but just want to maybe step out of it a bit or get some help, kind of relieve themselves a little bit from that. We can step in and kind of help be that resource to help manage those properties for them. In time, what we are doing is we're not just here to buy a property here and there.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate sponsors and syndication experts from every corner of the United States. We teach you how to harness the power of passive real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 136 of the Creating Wealth Podcast. My name is Kyle Curtin. I'm a co-GP in multifamily syndications targeting Central and Western Mass. Today, we get the great pleasure of chatting with Don Spafford. Don is a general partner with Beyonder Holdings, an outdoor hospitality investment group that is out of Denver, Colorado. Super excited to have you on, Don, and talk about this side of the industry. How's everything? What's going on? Welcome.
Thanks, Gal. Yeah, thanks for that great welcome there. Very, very exciting. Yeah, I'm glad to be here with you.
Yeah, no, thank you, man. Absolutely. So, kind of take us through pretty much like wherever you want to kind of start, on your journey. Like, how did you, fall into the like hospitality, like campground, like RV park type of thing, or prior to that, or it's up to you where you want to, kind of jump in.
Sure. Well, when I was a baby, let's see. No, but I got to take it back a little bit, kind of how it all kind of unfolded. It was not absolutely intentional initially. But I have a background in finance and investment science, all that kind of stuff with, stock investing. And when I got into real estate around 2017, so I bought my first property in 2017. It was a fourplex. My goal with that and my intentions when I started investing was cash flow. I wanted to build this passive income portfolio to overtake my W-2 income, so I could either at least retire or potentially at least have additional income sources coming in to take care of my family if something happens to me, or at least to build up a bigger we'll say retirement nest egg, or just just other income to come in to help pay for life expenses and things. Right, so that's kind of what started me in that path. So after I bought that first fourplex in 2017, it took about a year and a half before I bought anything else. And I bought two more fourplexes. At the time it was like a package deal out of state. And, so that was my first, I guess, deal, with an out of state property, relying fully on a property manager and in a market I'm not super familiar with at all. Initially, it went well, I guess. At least on paper, it looked like it'd be a great property. It was in the Midwest area where people always talk about you'll get lower price properties, to get more bang for your buck, whatever, higher cash flows. And on paper, that sounds great, but in reality, it doesn't necessarily work out that way, as you have a different type of tenant base that may or not pay your rent or cause other problems, right? So I had to deal with a lot of that after a bit. And of course, that was during COVID. I had a couple of those tenants that weren't paying, and I couldn't evict them, and so just a lot of hassle. Fully relying on a property manager to do all that for me out of state. I have since sold those properties, by the way, and reinvested it back with Beyonder Holdings. But what led me eventually to Beyonder is that after those, I started getting into other forms of commercial real estate, as I was always in the pursuit of better cash flows. Even just buying fourplexes got too competitive. I kept getting outbid by everybody. In my opinion, way overpaying. It's like, how do you even cash flow that? But so I started looking into other options and got involved in some development projects. I'm actually a JV on a triple net lease, multi-tenant, basically a strip mall building that we built from the ground up. I've got another JV on some land that we're planning to build a medical facility there. I eventually landed with a group that actually does development of build to rent multifamily. So I got involved with that even early on, back in early 2021, as that was the from everything I was searching for, at least the next best opportunity I could see. Again, no immediate cash flow, obviously, but big returns at the end of that. And so I got involved with that. That was kind of my first, I guess, a GP role as far as the syndication for anything. That was, again, this development project. And then as I was still, wanting to get more into cash flowing properties, looking for multifamily deals like either JV with somebody on or take to another syndication group. At this time, I was really not, would not consider myself a syndicator, operator, or anything, more than just an investor. But I was trying to get that point, right? So so I was like, if I find a great enough deal that I can't do as a JV because if it's too big, I can take to another syndicator. Because by this point, I'd started networking, getting to know people that are in that space. And as I was doing my own underwriting of these properties, I was not satisfied with the returns I was seeing. The numbers I was penciling out to were just too low of cash flows, which in my opinion made it too risky. Because I was like, I'm not going to bank on appreciation only because there's, things could happen. But if it cash flows, then it doesn't really matter what's going on. It's still going to cash flow, right? So, so I was, again, disappointed with what I was seeing on my the smaller deals, and then even the bigger properties I would try to find, I was still kind of seeing the same issue. So I get, well, maybe I'll just, I'm not great at finding properties. I don't know. Maybe there's somebody else that has a better system to find these great deals. And so I decided to instead go look for somebody else's syndications that I could invest in as just an LP investor, just to have something coming in. And I was kind of honestly surprised that the numbers I was seeing on their documents they were sending out were very similar to what I was seeing already. So I'm like, okay, well, they're not finding better deals than I am, but they're just doing them anyway. And being satisfied with a lower cash flow and all that, and having this expectation for the equity multiples and whatnot. So I was a little bit maybe depressed, I guess, because I was like, this is not cool, right? Again, for me, a 4 to 6% cash on cash was not not great in my opinion. Obviously, some of them had higher preferred returns, but they're more of like that you get caught up at the end with the in your equity, not necessarily the cash flow now. So I was not willing to risk the little money I had, putting in somebody else's deal, trusting that they're going to come through in the end. Which, as of right now, I'm glad I didn't, because there's been, as people know, this year there's been several foreclosures that have happened from those types of deals. So I decided to hold on and keep looking and researching what else is out there, what else could I do. And at this time I was still working my full-time job, which I had for almost 20 years. I was working for a financial firm based out of Omaha, Nebraska, and as I was working from home, which I've been working from home since like 2014, so I was way ahead of the COVID people. But so I'd be listening to podcasts all day long, pretty much while I was working. As I got into real estate stuff, I started listening to podcasts all the time. So I would just be listening to podcasts while I worked, and one day I heard somebody on one of these podcasts talk about RV campgrounds and the multiple income streams they have, and the higher higher cash on cash and other return numbers they have. So that kind of piqued my interest a little bit, just to want to learn more, to understand it and see what that really looks like. And for me, part of that is because of where I live in eastern Idaho. I'm very close to Yellowstone Park, and pretty much all my neighbors have RVs and go camping all the time. So I was like, okay, there's potentially some opportunity here for a group of potential higher income earners that can afford to buy these kinds of luxury items like an RV that could possibly invest in these too. So I started researching and listening to going to webinars and connecting with people that I could find that are in that space a little bit. And in that process, through some commenting on social media somewhere, I came across a couple guys that had been doing it. They said, "Hey, let's get on a call." So we talked, and they kind of discussed their vision and their goals, what they're looking to do. They had just bought their first properties a few months before that, and wanted to build a team and grow and to do more, expand, because they knew they couldn't do it on their own. And so as we discussed everything for pretty much the goals and intentions I were looking to do, to again be part of a team and investing in these cash flowing assets, pretty much matched up exactly with what they were looking to do to build this team. And just again looking at the returns that were there, I was already sold that I'm for sure investing. I already saw these as great cash flowing assets that I could for sure invest in and get that passive income I'm looking for. But now I also have the possibility to be involved with it and be part of a team doing it. And so that kind of got me excited in a way, because it was something unique and different, not just your standard multifamily, which everybody else is doing. It seemed like even honestly a couple years ago, it was like, everybody and their grandma was out, coming out trying to buy multifamily properties. So I was like, okay, this is a bit different, and I like being different. Not just like following the crowd and doing what everybody else does. And so I was like, let me I looked into it more, did some research, and I decided, what have I got to lose? Let's go for it, because just based off what I was seeing already in the deals I was looking at in the multifamily space, I didn't see that changing anytime soon. Whereas on this side, it's almost like a open range, like it's a whole new thing that could just totally explode, and it's kind of a more lesser known niche. And so I decided, let's go for it and give it a try and see what happens. And so that's been a little about over 2 years now that I've been part of the team, and we've grown a lot and obviously learned a lot as well. But we are continuing to buy properties and provide great returns back to our investors.
That's awesome, man. That's phenomenal. I like that whole story. And I think it's really interesting too, man, especially starting off with like that first 4-family, and if you don't mind me asking, like, did you house hack that one, or did you just buy that one as a rental? As kind of the intro.
I just bought it as a rental. I would have loved to done house hack, but we at that time already had 4 kids, a few of them teenagers, so it wouldn't have worked well. But what I did have to do is, when I started that, honestly, coming from a very, we'll say, a humble beginning, right? I did not have a lot of savings. I didn't have hundreds of $1,000s to go and buy property, so I had to get creative. I actually took a loan for my 401k for my down payment, but I also used a local lender in my area that does 10% down payments for property, so I did not need to come up with 25%, just 10%. And again, I pulled most of that from my 401k, and I've since I still own that property today. I refinanced it, almost 2 years ago, I guess now, and pulled out over $100,000. Yet I initially only put down like 26,000. I bought it for like 260,000, 10% down. It's now worth like 600,000. But I refinanced it. Did not take the maximum. I wanted to keep my cash flow still at a decent level, so I only took out enough to kind of keep my cash flow where I wanted to be, but had enough that I could pull out. So now it's essentially obviously infinite returns, but I've also now taken that cash and reinvested it to keep it growing and building, while that property is still cash flowing. So that was a great property to start with.
Absolutely, man. And it's funny because like it's actually like kind of hilarious, man. Because so I'm in Tewksbury, Massachusetts, like all the way across the country from you. Yeah. And like you and I have had kind of a similar beginning at that point, especially. And even like for us, like where I have my properties in like Central Mass, like I bought a 3-family a couple of years ago. And if you go closer to Boston, that's when those cap rates go down significantly. Just because of like how the market is, you could see like 3, 4, like around that, rough neck of the woods. And yeah, it's so funny that like we kind of have kind of a similar situation in a sense, you know what I mean? And like I bought the first property, I was like, man, I'm like, I'll do the landlord thing, but I'm like, I'm gonna go against the grain and not house hack again. Like I want to jump into actual multifamily and JV and syndication and all that type of stuff. And leverage it accordingly and that kind of thing. But yeah, no, that's awesome, man. And it's funny too. Like, did you? I thought it was incredibly interesting. For your next 2 properties, buying them out of state. Are you able to share like what state? Like, was it like super far away? Like, was it like relatively close-ish?
It was far enough away. It was Arkansas. Yeah. So halfway across the country, basically. Yeah. I've never visited the area. I've never seen those properties in person. Honestly, I did all just virtual. And it's like I read several books talking about long distance investing, and I was like, yeah, for me, taking the time to go out there and see it really is not going to be different. I'm not an inspector, so I'll just trust what the inspectors and other people tell me about it, and go with that. So that's all I did. And so I bought them, held them, and sold them without ever once visiting the property.
I love it, man. That's awesome. Did that carry over to, I guess, where you look for the assets that you guys pick up now? Like, do you guys typically source in other parts of the country for, the RV parks and stuff like that? And were some of the lessons, I guess, from asset managing those 2 4-families from across the country in a different way, up and down, did those carry over to kind of like the asset management of what you guys do now with those complexes being like, God knows how many states away,
Yeah. Well, so yeah, we actually target properties all across the country. We're not focused on one specific region or market. With RV campgrounds is very different than your multifamily type of asset. And These are properties people go to because they want to go have fun. So just to clarify, when I talk about RV campgrounds and resorts, these are like vacation destinations. People go here to have a great time. Then they go home. They don't live here long term. It's not like a mobile home park kind of property. We're just providing a great memories for people. So with that, it kind of doesn't really. I mean, it does matter somewhat, but I mean, where we're buying, it's a place where people are going to go to anyway. So we try to target properties within about a 2-hour drive of a major MSA, which kind of gives us that built-in guest base, right? Whether people are traveling cross country, you get people that live locally that just want to go out, go camping for a weekend or on holiday, take their maybe even a staycation rather than going to Disney World and spending $10,000. They'll just travel a couple hours and stay there for a week and enjoy all the fun amenities there for a bit and spend a lot less. So that's kind of what we're targeting. With that, we do have our own management company, of course, in-house. There's not, an RV campground of this type, like a transient vacation campground. It's not as simple as just hiring a property manager or, a manager to live on site like we do, like maybe a mobile home park or something. It's very much labor intensive, right? You got a lot of staff to see to people's needs and help with the reservations and maybe boat rentals or other things that got going on. So we had to pretty much develop our own management system to make that happen. We do of course use a lot of software for like the online reservations and other things like that for the guest experience, but we have a streamlined process for managing. Of course, we still have the staff and a general manager there that's on site, but we have oversight with that through our like a regional manager and other systems and process that we do in between there to kind of see the day-to-day management of those properties through those general managers. We have weekly management meetings with those managers and provide training and resources. And of course, a lot of our general partners and our regional manager and operations directors kind of go around and visit the properties on a regular basis as well, just kind of make sure they're going well, everything's doing good, not just rely solely on what we see in reports, right? So there's definitely some work involved with the asset management, but again, that's part of what makes us unique and honestly keeps a lot of other people out of it, to leave it open for us to just grow and take it over.
Yeah, absolutely. I really like how you have kind of like a tiered structure there, to make sure that, each of the rungs are kind of following the, what they should be doing, and not just kind of leaving it and kind of hope for the best, because it's funny you say that, man, because a friend of mine told me, probably about a year ago, she's another syndicator and she was working on a deal down in Jacksonville, I want to say. And her and the team flew down to the building after they closed for like the ribbon cutting and all that. It was a big apartment complex. And when they did a little, like site walk, there was a lot of things that weren't showing up on the reports that were a bit different than what they expected that they were going to find, and she was telling me like, public restrooms were an absolute disaster. Like there were certain other things that were an absolute mess. And it was shocking, because on paper and on emails, like everything looks phenomenal. You know what I mean? So I do definitely like that kind of like extra line of defense, for keeping things in order, and is that like kind of normal, I guess, or is that like one of the items that like makes you guys super unique is having that like extra, I guess, like accountability for,
Sure.
Yeah.
Well, I don't know. I guess can't really honestly say if that makes us unique or not. And I know that there's some other groups out there that do kind of what we do, and they have their own management process as well. I'm not sure how they operate with their management processes, but I'm sure it's something similar. Again, like I said, it's very different than just having a property manager and talking with your property manager and calling it good. So there's a lot more involved with that. But yeah, there's definitely like those site visits, obviously prior to purchase, are obviously essential. We never would purchase without visiting the property. We do actually probably a few site visits before closing. Right, we'll go there. Our initial upfront visit after we've got an official contract and things in place. Then we'll visit the property, look for any anomalies or problems, and then as we progress, of course, still do an inspection. But then we'll do another site visit walkthrough kind of prior to closing, just to make sure that things that are supposed to be there stay there. Like oftentimes, equipment may end up disappearing before closing, and so you'll make sure you still got your tractors and trucks and that kind of stuff that's supposed to be there. But yeah, after that, with the operations, I mean, obviously we look for great general managers anyway that are fully, we'll say, invested in the property, right? They love it, not just there to do a job. They want to I don't know, help provide this experience for the guests and just enjoy doing that. So they're typically fully invested in that property themselves, and they are incentivized to be so. They get bonuses for meeting certain income and expense budgets and things like that. And obviously for getting great reviews, we're obviously looking for 5-star review ratings from our guests. So all that is included for them to go kind of above and beyond than just be there to do a job. So yeah, we're I guess along those lines, what we do that is maybe a bit unique from others that are out there doing what we do, is that we also offer our services to other campgrounds as a management service, right? So we of course manage our own, but we do now also manage other third-party campgrounds. So those owners that are out there that still love what they do, love their property, don't want to sell it, but just want to maybe step out of it a bit or get some help, kind of relieve themselves a little bit from that. We can step in and kind of help be that resource to help manage those properties for them. In time, what we are doing is, we're not just here to, buy a property here and there and provide returns back to our investors and move on. That's it, right? We are building a brand with this. Of course, along the way, providing great returns back to our investors, but at the same time, we are building this brand of Beyonder to be out there and be a household name. Those that are familiar with camping or not, you drive across the country, you see like KOA signs all across the country. We are basically trying to compete with them and surpass them to be this household name. You think of campgrounds, you're going to think of Beyonder, and campground owners will come to us and our platform for resources on how to manage their property, how to train, and how to different things like that. So we are in the process of kind of building up all of those things around these RV campgrounds and being the go-to resource for all questions and needs for it.
That's incredible. I mean, especially even to have with a little bit of a different branch that's still related. I mean, there's so much that is intertwined in between those two areas. I mean, yeah, exactly. To just be a resource and pretty much in all facets. If people, or I should say rather, if the sellers of these campgrounds and stuff do want to sell from a super transactional, I'm done with it, you guys buy it type of thing. Or, if they're maybe mom and pop owners, struggling, maybe mismanaging to some degree, you guys can step in from that angle, be like, hey, we do a kick-ass job property managing. We are investors ourselves, the whole gamut, as well as exactly, just being a resource to provide a lot of value in a lot of different ways. I think
even I'd say even for investors, I mean, if you want to go out now and for example, you want to go buy a campground yourself, right? There's not much out there to go find on how to do that, or what you need to look at, what to analyze, how to how to run it, and all that kind of stuff. So we want to essentially provide those resources because again, there's not enough out there as it is. So if we can provide that and be that resource that people go to, that's going to help just again increase our industry awareness. So again, even campground owners, they want help managing or selling, or someone wants to buy, whatever, they might come to us, and still they could get on our buyer list for properties we pass on. We could pass over as here's a wholesale list basically. So pretty much all things related to campgrounds is what we're looking to be.
Yeah, no, I love it, man. Absolutely. So one question that I did have for you that I was curious of is, how does it look with a seasonal dynamic? Because I'm more on the multifamily side, so I have a lot to learn about your particular sector.
Sure.
You know what I mean? So yeah, how does it work? Going from summer to spring to winter, and folks renting it, keeping income coming in and quote unquote off seasons. Is there even an off season? How does that work?
Yeah, well, yeah, great question. And to be honest, no matter where you're at in the country, if you're in Florida, Texas, Massachusetts, wherever, right? There's seasonality to any campground. So the lower states, tend to do better during the winter months, honestly, because people don't necessarily want to be there when it's 110 degrees out, but they'll come down for winter when it's perfect weather, like 70s, 80s, and enjoy that time there. Obviously, the northern states are more busy during summer, and people tend to go away during winter. But at the same time, though, even in those cold climate properties where most of the, well, say the amenities and things will close down the property, we tend to still hold them open. This can of course vary by location, but in most cases, you can still get people that are we call seasonal campers, basically, where they'll come. They want to be in the area. They maybe traveling nurses or other workers that just need a place to park and stay during that time. And or at the same time, you get people that still love winter outdoors, like ice fishing, skiing, hunting, all that kind of stuff. That are still looking for a place to go. So we do have our properties that there's several sites that are winterized. So the like the water still will use without freezing. Again, we maybe close down our camp store and won't have obviously the lakes and things open for that kind of stuff. But people still come there and stay there. So we try to fill up as much as we can for those seasonal campers in the off season. But on top of that, you get people that will just pay for a place to store their boat or RV. So you get that storage income from that. You also have a lot of people that are, prepaying their reservations for the upcoming season. So if people have been to a campground on say, especially on the holiday weekend, for example, they're completely booked. You could not just pull up there and expect to find a spot. It's going to be filled. So people will make those reservations 6 months, even a year in advance, to say, okay, we're going to go to this and this place on this date. So they'll make those reservations now for next June or something. So all those things will still produce income during that off season.
That's awesome, man. No, that's extremely cool. And that's actually kind of a wonderful transition into, one of the other things that I wanted to ask is like, what are some of the alternative income streams that you guys have been able to implement into some of these properties? That part always excites me. Because I've heard, that like there's so many different ways and so many ways to be creative to really increase that NOI and get things flowing.
Sure. Yeah. Well, that's the great thing about these properties is that you're not limited to just rent and maybe laundry or pet income or something. So you've got it's almost unlimited potential of what you could do. As long as you can be creative and come up with something, you could probably implement it and produce some income, right? So something as simple as even if you got a small pond, you can go out and buy a couple paddle boards and people will rent those and they'll pay themselves off pretty soon and should be providing just pure profit from those. But a lot of things we do that people are very popular with are just go-karts, right? Not go-karts, golf carts. Go-karts would be fun too, I guess. But golf carts, people like to, these properties tend to be pretty big, all around the area. So rather than walking from their site up to where the where a lake is or the camp store or whatever, they'll rent a golf cart while they're there just to drive it around. So those are very, very popular. People will use again, for what we are looking to do, we purchase, again, these mostly family-friendly type of properties where people can come with their families and enjoy themselves, right? So there's all these different activities that are, we'll say, kid-oriented, maybe. There's things that go by different names, I guess, like a jumping pillow or something that's like a giant, almost inflatable thing on the ground, maybe 60 feet by 40 feet or something, that people just jump on them and bounce on them and slide off them. Not a bouncy house. This is just a whole almost an inflatable cushion, basically. So those do very well. Obviously, if we have lakes, we want to put in what's we call it an aqua park. There's the technical term is a whibbit, I guess, but just an aqua park is basically an inflatable floating obstacle course kind of thing, which are super fun. So people will come and of course pay to get out there and use that. Again, anything water related, paddle boards, kayaks, even if we have a big enough lake, we have marinas on some of our properties with boat slips. So if you don't have your own boat, you can rent a boat and go out boating or fishing or water skiing, all that kind of stuff. Some of our properties have ropes courses, zip lines, even horseback trails. You can come and pay to go horseback riding. ATV trails, bike trails, all those kind of things like that. And on top of that, there's even some of our properties we put on concert events. So people come out there for a concert. You might even be there for camping or anything else. You would come out for the concert and have a good time, and then by the night, realize that you're too drunk to drive home or something, and decide to hey, let's just go and stay here and rent a cabin or something, right? Because a lot of our properties, of course, it's not just RVs. We have cabins, or some of our properties have hotels on them, so there's multiple options people could use to stay there and have a good time. But yeah, some of our properties, people just will pay for what's called a day pass just to come out there and hang out for the day and go play in the water and do those other activities, and then go home at the end of the day. So So all that again brings in just additional revenue that adds to that bottom line more than just the RV rental sites.
Wow. That's extremely cool, man. That's nuts.
Yeah.
Holy crap. Wow. So along with, being able to add in a lot of those streams, is there, I guess, are you kind of limited to like the amount of on-site staff to be able to like carry out some of those things, or, like to be able to add more, like, do you need, maybe more folks to like, man some of those like rental like stations or like whatever you call them, like that kind of thing? Or what is kind of like like an overhead or like a staffing kind of angle look like?
Well, sure. Yeah. I mean, obviously, like I said, you can't operate a property like that with just, one or two people. So I mean, there's going to be, it obviously going to vary by property and the size and everything that's going on with it. But listen, you're going to have obviously your general manager for sure. That's kind of oversees all the other employees there. Pretty much every property is going to have a camp store. So obviously you get your front desk, people just come in for reservations, other needs and things. But you also have things to sell there, like obviously your beyond our merchandise and other things people want, snacks and drinks, that kind of stuff. So you need somebody there for that. There's going to be and some of this could be done through the camp store depending on the size of the property. If you only got a few golf carts, they can just do that for the camp store. But handling some other things that are if you got people out in like the obstacle courses and things, you need somebody there at that site to kind of monitor and make sure people are safe, and obviously they need to be trained for that as well. So yeah, staffing is like I said, it's a major need. We obviously could not operate without the staff. So probably our two biggest expenses at these properties are going to be our employee costs, and then insurance are our two biggest expenses. And part of that is obviously if I know a lot of multifamily we'll say operators that look for the cheapest insurance they can get, just to obviously keep their expenses low. I would love to say we get the cheapest insurance we can get, but we need to get the best coverage we can get. At these properties, we're not dealing with just the basic stuff. When people are in the lake and whatnot, getting drunk, they could get easily drowned or get run over or somehow killed or injured. So we got to make sure we have great liability coverage for all those kind of problems that could come up. So staff, it's it's like I said, it's going to vary by property, but it's on an average property. We probably have between I would say 5 to 10 people there to operate it. As another income stream, there is also food. We are not in the food business. We do have a few that we operate like a small like bar and grill kind of thing on site, but it's a full-on restaurant. We just rent out the building to a local restaurateur who comes and operates their restaurant and just pays to rent the building there, because we are not in the food business, right? But simple stuff like I don't know, chicken strips and pizzas and stuff you can throw in an oven and take out like you did like a roller skating rink or something, right? That's no problem. We can handle that. But anything more than that, it's not the business we're in.
Yeah. No, I really like that too. To kind of, in a sense, like delegate, like, who, not how that to, somebody's who is more in that, business, you know what I mean? To, instead of trying to like, just figure it out, Yeah. Right. No, I really like that, man. Yeah, no, that's insanely cool. Wow. So take us through, I guess, kind of like, on the actual like transaction for these kind of deals, right? Like, are these things that you typically like I know it obviously is pretty dependent deal to deal basis, but are these typically things that you will like JV on if possible, or do like a 506C or 506B or whatever? I guess, what do you kind of find yourself doing the most, if that's a reasonable question?
We as of now, we are syndicating all of our properties, right? So we either do a 506B or a C. Currently, right now, we do have a 506C that we have open throughout the rest of this year in 2023, depending when this comes out. but typically prior to this year, everything we did was 506B. And we intend to go back to that into next year, 2024. We're going to at least start our properties off with a 506B on an individual deal, and then if they don't fill up in a certain time, we'll switch them to a 506C. But yeah, we syndicate all of our properties with our investors.
Nice. Yeah, that's awesome. Yeah, no, I like that a lot. Are they typically like, how long are, I guess, kind of like the offerings, I guess, so to say, like 4 to 7 years, like?
Sure. Yeah, well, it's kind of I guess we would typically expect from I'd say the average expectation of a syndication is about a 5-year hold period. We may potentially exit sooner. It could possibly go a little bit longer. It all depends on of course, the market conditions at the time. But we plan for a 5-year hold per property. Currently, in our current open 506C fund, there are several properties within that fund. So each of those individually are expected in that 5-year time frame. But since they've been purchased at different points in time, there'll be like a rolling exit of those properties out of the fund. So if you're in the fund, you could be in, for up to 8 years, depending on when the last one is purchased and by the time it closes. But yeah, we typically are planning for a 5-year hold per property.
Nice. That's super cool. Awesome, man. No, that's insanely cool to kind of, get a pretty solid crash course into, that particular kind of asset type. I don't really know too many sponsors, especially around my neck of the woods that do that, Sure. I mean, there's like a couple like around in like New Hampshire and Mass and that kind of thing, but definitely not too many that I'm aware of.
Yeah.
Well,
the great thing about these assets, aside from the great cash flows, which I don't think we've even talked about that yet, but is that you can actually, I guess even if you're invested in multifamily, you could go visit the property and whatnot, but you're typically not going to really use it. You're not going to live there. You're not going to hang out in the parking lot, right? But on our campgrounds, we actually want our investors to go there. We invite you to go there and have fun, enjoy it. Use that investment, and that's what I use this tagline. Those can can see the video here. You invest where you play. We really mean that. We want you to go out there and play and have fun with it and enjoy it. Not just be something that's on paper you get a distribution for once in a while. It's something that you can relate to and create memories with. So that's pretty big on us. We're looking for that guest experience, not just for our guests, but also for our investors too.
Yeah, no, that's super neat. Yeah, I like that a lot. And I can imagine, some of the investors must be thrilled to, go there with their families and spend the weekend or XYZ. Yeah. They're like, exactly. Hey, like, it helps buy this thing. Like, hell yeah.
Exactly. Yeah. That's the cool thing. It, gives you like a talking point. You're sitting around, your campfire with your friends or whatever and say, hey, by the way, I'm part owner of this property. Like, what are you talking about? Right? So then you can, open up that conversation about investing and finance and all that kind of stuff. And it's just a very cool experience for sure.
Yeah, no, I like that, man. That's super cool. But awesome, Don. Yeah, thank you so much for coming on here, man. That was an absolute blast. That was a ton of fun to jump into that. Like, absolutely.
Thanks. I appreciate it. Yeah.
What's kind of next for you guys? Like, just continuing to kind of rip things, continue to source deals, raise capital, keep ripping through.
Yeah, all the above. So we've got, as I was talking about before about trying to be this go-to resource for everything, right? That's what we are working on right now to kind of launch in 2024. Is this whole like we call it Go Beyonder, is all these aspects of that. We have what we call a Beyonder Cares report, which is for campground owners, going to kind of fill out this assessment, kind of gives them an idea of where their property stands more or less, and for what they need to improve on for different kinds of operations things. Kind of like if you take your car to a mechanic, get the oil change or whatever, they come back with a report, like red, yellow, green. You need to check your brakes. You need to do this. Watch out for this in the future. That kind of stuff. That's kind of more or less what we're doing now for the property on these campgrounds. So we're providing that resource to campground owners as a free service. They can fill it out and get this big, 85-page report going over all those topics for them. We are launching our own podcast here pretty soon, talking about obviously again specifically for campground owners and managers and being that resource for additional information. We are working on again, just building this whole brand, more than just investing only, but we're definitely looking to create a lot more management contracts for those third-party management opportunities. But also, continue to keep buying properties and keep expanding. We're actually looking now to do some ground-up development. We're going to start building our own properties versus just trying to source them and find them. We're going to start building our own and have them be exactly how we want them from the very beginning. So that's things that we're definitely working on, and probably the first development project will be happening in 2024, and assuming that goes well, we'll be doing a lot more after that as well.
All right, hell yeah, man! Congrats. No, that's phenomenal.
Yeah. So lots of investment opportunities for people that are looking for cash flow now or building wealth in the future with those developments. That we obviously those will be a longer term hold and no cash flow up front, but potentially very, very high returns in the end for those that are willing to take that I guess higher risk versus having a existing cash flowing asset. I just want to cover real quick for we didn't talk about it, for those that are interested. Obviously, you might be curious, what was so attractive about this versus the multifamily that I was talking about before, right? So we are targeting properties that can deliver an average of a 12 to 15% cash on cash. So we're talking, like double or triple what I've been seeing before in multifamily or other assets. So that's initially what got my attention to say, hey, I got to learn more about this, right? And then on top of that, 2.5 to 3x equity multiple. So it's a much bigger return profile overall. And the one thing I'd say is probably surprising to most people. You may not, even for me, I was kind of blown away initially, is that for depreciation, a lot of people think, the depreciation is a big factor for a lot of people. That's all. They might care more about that than they do about the income. These campground properties actually can deliver very high depreciation, probably much higher than you'd see on multifamily or other assets. And that's because a lot of the infrastructure on the property can all be accelerated in that accelerated depreciation versus like your structures on a building that can't be. And so therefore a big bulk of the purchase price is, accelerated and depreciated in that first year. So, very, very high potential for depreciation for those that need that.
That's awesome. And I'm glad you brought that up, because I wasn't thinking about that until you mentioned that. I was like, I wonder if you could do a cost seg on something like that.
Yeah, we do. Yeah.
Hell yeah.
For those that are looking, we just did a webinar a couple of days ago that you can find on our YouTube channel. Which we have a YouTube channel available, just for Beyonder Holdings in our YouTube. But we often put out our webinars we do for our fund and other things, but we also cover other topics. We did this one talking about cost segregation there. They had our cost segregation expert come on and explain why depreciation is higher in campgrounds versus other things and how it works. And so that's available on our YouTube channel for those that want to find that as well.
Love it, man. And that's perfect, actually, because I was just going to ask you before we jump off, where on social media you can be found, like where your website. I'll tag anything you want down below.
Sure. Yeah. Well, you can find me on LinkedIn. I'm very active on LinkedIn. It's kind of my playground. I like being there and posting regularly and connecting with people there. I'm also on Facebook as well, but I do prefer LinkedIn. And of course, you can go to our website at beyondercamp.com. And kind of shows you our different properties there, and you can even make a reservation there to go to one of them. Then just go to our like one of the drop downs, Invest with Us tab, to learn about investing with us as well. But I'd be happy to get on a Zoom call with anybody that listens to this and discuss more about it and see how it could potentially work for you and add it to your portfolio.
Cool. Awesome, man. Thank you so much.
My pleasure.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs. Get access to our private investor portal and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.